Caesar Capital. It's the 25th of February 2024. Hope you're doing well. We're going to look at Bitcoin today, and the crypto markets, but we're going to look at things a bit more holistically. We're going to zoom out instead of looking at the minutiae and the lower time frame charts. We're going to just look at kind of a few bullish factors that are present at the moment, which is going to, in my view, make the price continue to move to the upside in stages. There are many bullish factors at the moment, so this isn't an exhaustive list. The list is non-exhaustive, but these are some factors that I think will certainly help the price of Bitcoin and indeed the price of other crypto assets to continue to grind to the upside through 2024 into 2025. So the first thing is the obvious thing, right? We're looking at the spot Bitcoin ETFs and how many or how much assets they have of Bitcoin under management at the moment. The only thing that can be said about this is that the Bitcoin spot ETFs have been nothing but a resounding success. They have been this has been the most successful ETF launch in history, and BlackRock and others continue to really hunker down and continue to buy Bitcoin at quite an alarming rate, to be honest. But to be honest, institutions, they don't move very quickly. They dip their toe in the water and they start to slowly edge themselves into the sea, as it were. And this sort of level of buying at the moment is literally just dipping one's toe into the water. And I think this buying is going to continue to increase as we move into 2024. And of course, now that institutions are here in 2024, they certainly were not here in the last cycle. It doesn't matter what people say, institutions were definitely not here last cycle. I speak to people who work for institutions all the time, and I can unequivocally say that they were certainly not here last cycle, but they are here this cycle. And as they continue to, as I say, dip their toe into the water and gradually get themselves into the sea or into the pool, the buying frenzy will continue higher, and institutions are here now, and this will allow other institutions to buy Bitcoin under either the guise of BlackRock or the others who are using the exchange traded funds. And not only does it open up institutions, but it also opens up the sort of standard retail mum and pop type investor who probably wouldn't have been interested in buying Bitcoin previously because of the hassle really around it, having to open, for example, a Coinbase account or a Binance account, and then sending the Bitcoin to a private wallet, taking a note of their private keys, having the sort of anxiety and worry around the private keys. Those sort of people wouldn't really want to do that, and they wouldn't be interested in buying Bitcoin. But now really for these sorts of people, it's just a click of a button, okay? And this really is going to open the floodgates, in my view, to lots of capital flow that wouldn't really or usually be coming into Bitcoin. So we're going to see a lot of that as the year moves on. And as I say, the institutions are literally just dipping their toe. You can see on the screen now, these billions and billions and billions of Bitcoin under management, is literally them dipping their toe into the water. And this is going to increase significantly as we move on into 2024 and into 2025. So that's the first thing. That's a very obvious thing, but that's really, really bullish for Bitcoin. The second thing, of course, is another obvious one, is that we have a halving coming very, very soon. I think the projected halving date at the moment is about the first 2 weeks of April. So about the 15th of April, the halving rewards will, of course, halve. And as it stands, on average, the miners, when they're running as hard as they can run, can mine about 900 Bitcoins a day. That's currently, and come the 15th of April or thereabouts, the miners will only then be able to mine 450 Bitcoins per day. So that is going to cause, in my view, a supply shock, inverted commas, because we have, of course, the likes of BlackRock, etc., and we have the likes of the crypto community continuing to buy Bitcoin, Bitcoin being in high demand, and the supply suddenly being halved. That is going to cause a supply shock, which will very, very likely move the price to the upside. And it doesn't matter what people say about the halving. Some people say the halving's priced in and all that sort of stuff. The halving's not priced in my view. I mean, you just have to go back in history and look at the halving events. We can see the first halving event here on the 28th of November 2012. The price moves pretty quickly to the upside. The second halving in July 2016, where again there was a little bit of a dip before the halving, which isn't uncommon, and then a nice grind to the upside, and then in similar fashion again in the last halving in May 2020. So in my view, that the halving is not priced in. It wasn't priced in May 2020. It wasn't priced in July 2016, and it wasn't priced in November 2012. So come April 2024, the likelihood of the halving being priced in, I think, is very, very unlikely indeed. So that's another bullish factor. The ETFs, the halving coming, both working together to probably push the price of Bitcoin to the upside. Now, thinking of those two factors, the halving and the ETFs, consider this as well. We've got, take a look if you can go onto Glassnode, you can open an account for free. Obviously, I pay for mine. You get more data when you pay for it, but you might be able to get this basic data. This is the percent balances, the percent balance rather of Bitcoin on exchanges. And if you look at the percent balance at the moment, it's super, super low down here, really, really low. It's about 11.76% of the circulating supply of Bitcoin is held on exchanges, and that's the lowest it's been since, and it's continuing to fall since about where we were. It's about here. So December 2017. So such a long time ago. Okay, that was the sort of the peak of the last the previous bull run back in 2017. So that's really, really significant. So the balance of Bitcoin and exchanges is significantly moving to the downside. The halving is on the horizon, and institutional investors are here. All of this, I think, is a good sort of strong catalyst for the price of Bitcoin to move pretty dramatically to the upside. We've also got the sort of the structure of Bitcoin as well. The structure looks really nice. Bitcoin on the higher time frames here on the weekly continues. We've got the low here, which we got pretty much bang on in the group. So we were accumulating Bitcoin. Our average accumulation price is about 16.5K. But what we've got here is we've got this nice higher lows being printed by Bitcoin. It just continues to print higher lows on a higher time frame, and that's a really, really nice structure for a bull market. So it's pretty clear that the structure's really nice, and at the moment we're sitting above a really important price point. We're sitting above this area of around about 46.8 or so K, and that's important because that was the last sort of stand of Bitcoin in the bear market. So it came down pretty dramatically. It came up, rejected there. And that was the point really that set the rally to the downside for Bitcoin. So Bitcoin is in a really, really interesting price point at the moment. And it's super bullish, in fact, that it's sitting above this area of 46.8 or thereabouts. Maybe it's a little bit higher, 47K. But if Bitcoin can consolidate above that price point, then that would be really, really bullish going into the halving. It might not happen. In my last video, I've set out the levels below, and it's quite possible that Bitcoin could come back down to the 30K level, but I just think that's unlikely at this stage. I think Bitcoin is looking very strong at the moment, and the feeling of the market for me, I've been in markets for well more than 15 years now, but with Bitcoin it's about 8 years, and you after a while you get a feeling for the market, and it just feels for me pretty strong at the moment. But of course, we can't sort of ignore the lower targets, which if you're interested in those, go back and have a look at the last video I did. So we've got we've got the ETFs, we've got the halving, we've got the balances of Bitcoin, or the balance of Bitcoin and exchanges dwindling, them being as low as they were back in December 2017. But another interesting factor of on-chain analysis is the Mayer multiple. Now, again, go and check out Glassnode. You can read about what the Mayer multiple is, but essentially, without going into a huge amount of detail, the Mayer multiple tracks overbought and oversold conditions for Bitcoin using the 200-day moving average, and where the price of Bitcoin is in relation to that 200-day moving average. And you can see here down at the bottom of the chart, when we get above the red line, we're in serious sort of overbought conditions. And then when Bitcoin drops below the green line, you're in sort of, or Bitcoin would be in serious oversold territory. And at the moment, we're not even in the sort of middle or the median line of this channel. We've got a long way to go before we even get into that sort of overbought conditions. And if we were to just go parabolically, for example, today to the top and be in an oversold environment, we would be, sorry, an overbought environment, we would be looking in the category of about $86,700 Bitcoin. Okay, I mean, obviously that's not going to happen, but that just gives you an example of what would be an overbought condition for Bitcoin. Now it would have to go literally today parabolically to the upside, and it would then be in an overbought condition in relation to the Mayer multiple, and that would be at 86.7K. Obviously that's not going to happen, and obviously the moving average at the top, the Mayer multiple, will continue to posture, as it were, as you can see here, to the upside. And that will continue to rise as the cycle continues on into the future. So at the moment, we're the top of the Mayer multiple is 86.7K, and that will continue to posture to the upside and continue to move. And of course, the bought condition of Bitcoin will then continue to move to the upside. So that's super bullish as well. The other thing as well is, and this is sort of on a macro level, it's that the global liquidity. A lot of people look at M2 and all this sort of stuff, but whilst that's helpful, the best thing to do really is to look at global liquidity in the round rather than just looking at cash. And this is a really helpful chart by a very experienced and smart trader and investor called Michael Howell. I suggest you read his book called The Rise of Global Liquidity, Capital Wars. It's a really good read. You can buy it on Amazon, I think. And what Michael from Cross Border Capital has put together here is a global liquidity index. And this includes cash, debt, money markets, lots of things, because you can't really just take into account cash when you're looking at global liquidity. You've got to take into account lots of other things as well. And that's what Michael has done here. And I suggest you go and watch some of his videos and read his book. But what's really interesting about the global liquidity index that Michael's put together here is that when you actually look at it closely, you will find that it kind of works or moves in sort of 4 to 5 year cycles, okay, with liquidity being high and liquidity being low. And of course, when global liquidity is low, the market is usually finding its low point. And you can see here, back in around about sort of December, November 2022, global liquidity was reaching its bottom area. And that's really when the S&P 500 bottomed out. And that's really when Bitcoin, of course, bottomed out. And then if you go to the top where it was global liquidity was topping out, this was around the sort of, the 2021 point, where what was happening in 2021. towards the end of 2021, Bitcoin was finding its peak in the market. And then down here, the global liquidity low around about the September to December 2018 point. And what was Bitcoin doing in December of 2018? It was bottoming out, wasn't it? So we've got the bottom area of Bitcoin here, the top area of Bitcoin here on the global liquidity index, and then again it caught the bottom. And the good thing about global liquidity at the moment, despite what lots of people will keep telling you, there is no liquidity in the market, it seems from Michael's chart here that global liquidity is certainly on the rise and looking to peak out towards the end of 2025, which would, to be honest, fit quite nicely with the 4-year cycle of Bitcoin. And the reason why the global liquidity sort of index moves like this, and I'm sure Michael will certainly be able to explain this better than I, but it moves like this because essentially debt has a 4 or 5 year life. So it has a cycle life of about 4 or 5 years. And then after that, it needs to be rolled over. So debt needs to be rolled over. When you've got debt, you need to roll it over. Otherwise, you're going to default on it. So what happens is that the debt's rolled over every 4 or 5 years. And that's why we get this interesting global liquidity cycle. So lots of things really here to be bullish about with Bitcoin. We've got the ETFs, we've got the halving, we've got the balances on exchanges dwindling, we've got a bullish structure, we've got the Mayer multiple looking pretty bullish, and then we've got global liquidity rising. And all of these things, in my view, put together are the perfect recipe for a good, strong bull market for cryptocurrency. And that's what I see going forward into 2024 and 2025. So that's the video for today. If you want to join our VIP group, the link's in the description. Check out the website. You can either send us an email through the website or you can DM me on Twitter. The response times are pretty quickly, and we can get you into the group, and we can get you learning, and we can get you confident about your position in the markets at the moment, and hopefully making money rather than losing money. Okay, well, that's it for today. Thank you very much for listening, and I shall speak to you all soon. Take care. Bye-bye.